Guys, last week S&P 500 made a new all-time high at 4975 and was sustaining and is expected to sustain and is expected to remain bullish. But this bullish movement is now going to face a very heavy resistance in the S&P 500, Dow Jones and Nasdaq. Now on Friday, S&P 500 closed in a condition which is favorable for a gap up open on Monday. But because of the special conditions in the market on Friday, this gap up is not 100 or not 50% confirmed. There may or may not be a gap up open, there may be a gap down open. And the conditions were, on Friday, stock market was bullish, dollar index, DXY, dollar index was bullish, heavily bullish. The 10-year bond yield was also bullish. So what is so special about this particular combination? So this was my second update to my Patreon community members yesterday. And here I mentioned that this particular combination is unique and problematic because everything at the same time is not allowed to go bullish or bearish. And historically, 95% of the times we have seen that whenever this kind of situation comes, then we see a sudden fall either in the stock market or a sudden fall in the dollar index or the bond yields. This means that on Monday, we are going to see some strange movement either in the stock market or in the dollar index and the bond yields. Now the interesting point that on Wednesday, the Feds decided to pause the rates and the S&P 500 gave up approximately 1.6% on Wednesday. So when I posted these comments that whatever he is talking about and the way he is talking about is either hawkish or neutral but not dovish. At that time the S&P 500 was trading at approximately 4,900, and when I posted this particular update, this particular comment, then there was a sudden fall, a heavy fall, and this fall was approximately 1% within 15 minutes or 20 minutes or so. But still the next day it was surprisingly it was able to move up, it was able to sustain. What actually helped the entire stock market to sustain? This was my previous S&P 500 weekly technical analysis, and the answer was clearly here. Then the answer to that question is the Dow Jones 38,070 mark. And on Wednesday, in my final update and in my subsequent updates on Wednesday, I've cleared this particular thing that, so the answer was that as long as Dow Jones is sustaining at 38,070 mark, no matter what is happening in the S&P 500 or the Nasdaq, the market will sustain. And yes, there was some manipulation on Thursday. Otherwise, this much bullish movement was not possible. Anyways, guys, I hope that this picture is clear. What has happened, what is going to happen, and the resistance, etc. I'm going to discuss everything in detail in this S&P 500 weekly technical analysis. So if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. And if you want to join my Patreon community to get these the daily updates, the daily precise updates of the S&P 500, I have given the link in the description of the video and also in the comment section. Now guys, I am going to discuss the agenda of this S&P 500 weekly technical analysis. The first point of the agenda is the S&P 500 technical analysis on the weekly chart. So on the weekly chart, see, the problem is not seen on the daily chart. Whatever the problem is there or is about to be seen, it will be on the weekly chart. I will show you the weekly chart of the Dow Jones and the S&P 500, and then through the technicals I will show you that what kind of problem market is going to face as early as next week. So weekly chart means the big picture for a week, for a month, for a quarter or so. The second point of the agenda is the comments of the Fed chairman and the economic outlook. So the economic outlook is now more on the soft landing. The soft landing and the hard landing. Soft landing means correction. Correction means 20% decline or 25, maximum 25% decline in the stock market. Just like 2022, okay, there was very heavy decline that was up to 25%. And the hard landing is the recession. So now as per the comments of the Federal Reserve chairman, okay, and the numbers and everything, I will discuss the soft landing and the hard landing, means correction and the recession. The best case scenario for now is the soft landing. Soft landing means correction, 20% to 25% decline. in the stock market this year. Okay, that is the best case scenario, and even the Feds are trying to achieve this, the best case scenario. So I will discuss all of these factors here in very brief in the second point of the agenda. The third point of the agenda is the S&P 500 technical analysis on the daily chart. Again, I will show you the magic. There was surprisingly there was a magic. The MACD was supposed to give a bearish crossover and was supposed to bring more pressure, but surprisingly on Thursday there came an unexpected bullish movement, a bullish push, not movement, a bullish push out of nowhere. This has help the MACD to remain bullish and not to give a bearish crossover. So on Thursday itself, its intentions were clear that the market is going to sustain and is going to move up and is going to remain like this at least until Friday, yesterday, end of the day. Okay. Anyways, the fourth and the last point of the agenda is the probable movement of the S&P 500 and the Dow Jones, Nasdaq, and the entire US stock market from February, which is Monday, to February 9th, that will be Friday. Whatever is going to happen in the US stock market in next week from Monday through Friday, I am going to cover in the last point of the agenda. Just like last week I mentioned that the market has Monday, Tuesday, Wednesday, Thursday, Friday. So Monday, Tuesday, Thursday, Friday, and Wednesday is the key point. This is where everything will be decided. So until Wednesday, market can go bullish, not a problem, but this will be until Wednesday. On Wednesday, it will be decided what should happen to the market, okay, or what will the next course of action. And then on 1st of February, Apple, Amazon, okay, they are going to post the earnings, and then the non-farm payroll data, and then these things will decide the fate of the stock market, right? So similarly, through the data, through other analysis, and through the technical analysis and the numbers, I will show you, or I will tell you, and I will give you the probable movement of the S&P 500 and the entire stock market next week. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you are looking for the daily precise updates of the S&P 500 from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now guys, I am going to discuss the first point of the agenda of this S&P 500 weekly technical analysis. And here I will do the technical analysis of the S&P 500 on the weekly chart. This is the weekly chart. Let me write it down. Weekly chart. Weekly chart means one candle represents 1 week, not 1 day or 1 hour. One candle means 1 week. Now first the candle. If you look into the candle, it's a good or a heavy bullish candle, right? This indicates that there were or there are bullish sentiments in the market. Okay, and also because this bullish candle is a kind of candle that has formed after 3 successive bullish candles. Okay, so this indicates a gap up open on Monday. However, this gap up open and this condition has been cancelled because on Friday the stock market was up, the bond yields were up, and the dollar index was up. Okay, this is a very rare and very unique combination, and this combination is not allowed. Now in terms of the technical indicators, all of the technical indicators are bullish. Moving averages, Ichimoku cloud, Bollinger Bands, everything is bullish. MACD is also bullish. MACD is also bullish and gaining, and the divergence is increasing. The stochastic RSI is absolute bullish, and yes, it is the S&P 500 on the weekly chart is overbought and saturated. Okay, so this means that on the weekly chart, S&P 500 is 100% bullish or absolute bullish, as well as saturated and overbought. This also means that next week, as early as on Monday, if the S&P 500 moves up even by 1 point on Monday, it will hit absolute saturation and absolute overbought condition. Okay, so that is the primary resistance, or that will act as a primary resistance for the S&P 500. So does that mean that the S&P 500 will be under pressure to give up on Monday? No, not necessarily, because we are talking about the weekly chart. This is the weekly chart, and in week we have 5 days. Okay, this means that if the S&P 500 moves up on Monday, remains bullish on Tuesday, also maybe on Wednesday, but gives up heavily on Thursday and Friday, then also it will come down and it will close below the previous close. Previous close is how much? Previous close is 4958.62. Okay, so it can remain bullish for 2 or 3 days or maybe 4 days, and then it can give up heavily, and then it will come down and will close below 4958. So that will also fulfill the condition, not a problem. Okay, but the thing is that by Friday, by February 9th, if the S&P 500 keeps on trading above or is seen trading above 4958, then this will be a real problem for the S&P 500 and for the entire US stock market. Okay, now at the same time, when we analyze the weekly chart of the Dow Jones, then what we are going to notice that the Dow Jones has made another all-time high. Okay, is through all of the technicals is 100% bullish, 100% bullish, as well as saturated or heavily saturated and heavily overbought through all of the technical indicators. And the Dow Jones is much more saturated and much more in overbought condition as compared to the S&P 500. Okay, and that is the reason why we are discussing the Dow Jones again and again, and that was the reason that I've given you the level. This is the mark 38,070, that as long as Dow Jones is sustaining above or at 38,070, nothing will go down. The market will somehow, it will sustain, it will not go down. And this is exactly what we have seen on Wednesday. It came down heavily, S&P 500, but on Thursday and Friday it has recovered. So this means that we will keep on discussing Dow Jones until and unless the Dow Jones comes out of this particular condition where it is not, or where the S&P 500 and the Nasdaq are not dependent on the Dow Jones, and the Dow Jones is not heavily influencing these indices. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. And if you want to get the daily precise updates of the S&P 500, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now guys, there is one more thing. I have this program that is the S&P 500 knowledge transfer program, or the stock market knowledge transfer program. Through this program, I teach everything like movement, hacks, strategies, trend, analysis, manipulation, technicals, predictions, support and resistance levels, and much more. Predictions as in even before the things happen in the stock market, we can predict. And the support and resistance levels, and if you have subscribed to my YouTube channel for last many months or years, then you know that my support and resistance levels are very well respected by the S&P 500, Dow Jones and the Nasdaq. And this program is one-on-one basis, and whenever you want to participate in the program, this is my email address, and this is the Google spreadsheet wherein I have mentioned everything in very detail. So this is the Google spreadsheet, and you will see that whatever I'm going to discuss, the calculations, the technicals, the hacks, strategies, everything is there in the Google spreadsheet in very detail. And these are the terms and conditions, and these are the snapshots of the meetings, the people who have participated in the program. So whenever you want to participate, this is my email address, and also I've given the link to this program in the description of the video and also in the comment section. Now guys, I am going to discuss the second point of the agenda of this S&P 500 weekly technical analysis. And the second point of the agenda is the Fed chairman, his press conference, FOMC decision, and the economic outlook. Okay, so first the decision. The FOMC decision was, okay, as we all knew, that Feds are not going to raise the interest rates, and also they are not going to cut the interest rates. Simple. Okay, the interest rates are still at 525, 550 BPS. Okay, at the range, at the level. Now, the Fed chairman press conference and the key points of his press conference. Okay, and through these key points, we'll be able to know, okay, the intentions of the Feds. Now, the comments of the Federal Reserve chairman. Okay, these were many comments, but let me highlight only the key points. Okay, I have included that in the final update. Okay, so the first thing was that yes, clearly in the recent press conference, the Federal Reserve chairman was hawkish or neutral but not dovish, and he has cleared that the Feds are considering the rate cuts, but for the rate cuts to happen, Feds need more time to gain confidence, and he has declined to say when exactly. But the Wall Street was simply trying to force him to say that when exactly the rate cuts will be there or something positive on the rate cuts. Many questions, okay, we have seen in that in the live press conference, but he was very much firm, okay. And also he has mentioned that there will not be any rate cut, or a rate cut in the month of March is unlikely. So this is a very important point and very strong point. Now, why the comment that there will be no rate cut in March, or a rate cut in March is unlikely? And also he has explicitly mentioned that there are people out there who are thinking much or way ahead of what the Feds are thinking. Okay, means the people out there, they are highly or they are heavily speculating, means the Wall Street. Okay, so this the heavy rally that you are seeing here, this was because the Wall Street was convinced that the Feds will go for the rate cuts as early as March 2024, because the situation, the economic situation will deteriorate, okay, by that time. And then after March 2024, back to back, the Feds will go for the rate cuts, and this means a recession. Okay, means this kind of scenario the Wall Street was expecting. So this was for the recession. And surprisingly, even after the Fed chairman himself has cleared that because of these conditions, okay, in the economy, the labor market is strong, and all of these are conditions, okay, Feds are not expecting a rate cut in the month of March. However, here you can see that the Wall Street is now anticipating that there is a 62% probability that the Feds will not go for the rate cuts. However, there is a 38% probability that the Feds will go for the rate cuts. Before this meeting, or so 1 month ago, what we have seen that the probability was only 29% that Feds will keep the rates as is, but the probability was 65% that the Feds will go for a rate cut in the month of March. And this heavy bullish movement was based on that speculation. Okay, so the thing is that Feds are thinking, or Feds are trying for the soft landing. Okay, Feds are thinking or trying for the soft landing. At the same time, the Wall Street is expecting hard landing or recession. So now Wall Street and the Feds, they are thinking differently. Feds are thinking based on the economic data that there will be a soft landing. Soft landing means 20% decline in the stock market or 25% decline in the stock market, means a correction. Soft landing means correction. Wall Street is somehow Wall Street is still convinced and is expecting a recession. However, as of now, the economic indicators are not suggesting or not saying explicitly that 100% there will be a recession. Yes, there are like 30-40% chances of a recession, but not to the level this the Wall Street is thinking. Okay, and the economic conditions and everything, okay, they are suggesting, or they are saying, including the Fed, they are expecting a soft landing, a correction, okay, 20 to 25% decline in the stock market. So now this particular comment that there will be no rate cut in the month of March, this means that after getting a confirmation from the Feds that there will be no rate cut in the month of March, the Wall Street must correct itself. It must go for a correction. It must correct itself based on the fact that there will be no rate cuts in the month of March. Okay, this correction in the S&P 500, this correction will be up to 452737. Okay, before that there are some other strong levels, but the maximum correction as of now will be up to maximum 452737. Okay, however, on Thursday there came an unexpected bullish movement. Okay, this was manipulated. Clearly we have seen that the kind of push that was there on in Microsoft and others. And then on Friday, it was surprisingly there that on Friday the Wall Street, because of Meta, Apple, Amazon, the stock market was heavily up pre-market. Then at 8:30 a.m. Eastern time, the non-farm payroll data was published. Now this non-farm payroll data was much better than expected. Wall Street was expecting a heavy decline. The non-farm payroll data was 2 times of the expectations of the Wall Street. Now why this is important? Because the Fed chairman has said that Feds may go for the rate cuts earlier means maybe March or May, provided economic conditions demands for it, and also if the economy remain resilient and also the labor market, then Feds will delay the rate cuts. This means that, so what happened as the 8:30 a.m. Eastern time, okay, non-farm payroll data, it was published. Then we have seen a heavy drop in the pre-market, in the futures, heavy drop. This means that the market has considered or accepted that no, Feds are not going for the rate cuts, and this 62% was actually 82%. Yesterday this was 82% probability that the Feds will not go for a rate cut in the month of March. 82%. Then within a day something happened and it came down to 62%, but still the Wall Street is now somewhat convinced that there will be no rate cut in the month of March. So this non-farm payroll data has further ruined the plans of the Wall Street that there will be a rate cut. Now, so this means that this better than expected and non-farm payroll data means that the economic conditions are not demanding for these rate cuts. Economic conditions are good. He said that labor market is still strong and demand is more than the supply, but this is now coming in balance. Okay, but this the non-farm payroll data, it says that this will take some time. This balance will be there, but it will take some time, a few more months. Okay, now other than that, he said that as of now, Feds are concerned about the inflation, but they are not much concerned that the inflation will move up or will get a heavy bullish reversal. No, what the Feds are concerned about is that there is the greatest risk or the greater risk if the inflation comes down but sustains or remains above 2% level and neither moves up nor comes down. Means the inflation sustains above 2% mark. Okay, maybe like 2.5%, maybe like 3%, and remains around here. It won't come down and it won't move up. Okay, it remains sticky at this point. This is the greater risk, the greatest risk for the Feds if the inflation behaves like this. Okay, now again and again the Wall Street asked him if and when the Feds will go for the rate cuts. Many questions from the Wall Street were there, okay, in the press conference, but again and again he was very much firm. And now the summary of everything what he has said and the economic outlook is: soft landing is confirmed. Soft landing is confirmed means 20% decline or 25% decline in the stock market. Okay, so this may not happen immediately. Okay, people might think that this must happen immediately. No, so these things are time consuming things. Okay, this will happen. Yes, this is what we know. This is what the market knows, the Wall Street knows, everyone knows. Soft landing, 20-25% decline means correction. It will happen in 2024. This is 100% confirmed. Okay, but when exactly the process will begin? Okay, that's the question. For example, if the Wall Street if the correction starts now, then the S&P 500 is trading around 4,907 or something. It was that. But if the S&P 500 further moves up, okay, then this correction will be counted from that particular level. But the correction will happen. This is what we know. From what level it will happen, this is what we are waiting for. Okay, now, so this economic condition is clear, and at the same time the recession is still in the picture. It is not completely out of the picture. Okay, and this is still in the picture because of the Wall Street, not because of the Feds or not because of anyone, but because of the Wall Street. Because the kind of demands or the kind of expectations the Wall Street is putting here, okay, in the picture, it says that economic conditions are going to deteriorate very quickly and very heavily. Okay, so even the Feds are not anticipating that kind of thing, but somehow the Wall Street may be speculating, maybe the Wall Street may be having that kind of information, that kind of data. That is why the Wall Street is still firm, is still very much expecting that this kind of condition will be there. This will force the Feds to go for the rate cuts, and these rate cuts will be back to back. Okay, so the recession is in the picture only because of the Wall Street. Okay, otherwise soft landing is confirmed. The correction 20-25%. The difference between the recession and the correction is the time. The correction may be there for a minimum of 3 months, 3 to 6 months. The recession will be there for 12 to 18 months. Other than that, the correction will be 20% or 25% decline, and the recession will be up to 50% decline. Okay. So these are the key differences in the recession and the correction. So I hope this particular picture is clear, very much clear what he said and what the Wall Street. And yes, one more thing, this is the bullish movement in the stock market, this bullish movement, and now the Wall Street is that now the Wall Street is heavily going against the facts, against the data, against everything, and this is making the stock market more and more, what we can say, like dangerous. Okay, so the stock market is getting more and more dangerous and is susceptible for a heavy fall, for a sharp fall. So we can anticipate a heavy and a sudden fall any day, anytime, right? So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. And if you're looking for these, the daily updates, the daily precise updates and analysis of the S&P 500 from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now guys, I am going to discuss the third point of the agenda of this S&P 500 weekly technical analysis. And in the third point of the agenda, I will do the technical analysis of the S&P 500 on the daily chart. This is the daily chart, D as in daily chart. And here on the daily chart, at first the candle. Now the candle is a heavy bullish candle indicating bullish sentiments were there and are there. And also if you notice the same in the Dow Jones, then again a good bullish candle indicating bullish sentiments were there or are there. Okay, but this candle does not confirm any gap up open itself, unlike weekly candle. So in the first point of the agenda, I've shown you that the weekly candle was indicating a gap up open, but this candle is not indicating a gap up open. Okay, and once again let me remind you that on the weekly chart I've shown you that even though the weekly candle was indicating a gap up open, but because of this particular condition that the bond yields were heavily up, the dollar index was up, okay, and the stock market was up. So because of that particular condition, the gap up open, okay, that condition was cancelled. So it may or may not be, rather there may be a gap down open. Okay, so these were the conditions. Anyways, so now it is clear that yes, there are bullish sentiments in the market. That's it, nothing else. So what does this mean, that the bullish sentiments in the market? This means that the market will try to sustain, okay, and to move up. Even if it fails, then also it will try to sustain. But the bearish movement, okay, kind of this, the bearish movement, it might not come anytime soon, okay, or the bearish movement will be conditional. Simple, the bearish movement will be conditional and will be subjective. Okay, so this thing is clear. Now let's see what the technical indicators are saying. Technically, if you notice, this was the MACD condition I have discussed in the beginning of the video, that the MACD was just about to give a bearish crossover, but because of this manipulated push on Thursday, there was no bearish crossover, rather the MACD, okay, it went again bullish, and then this thing. Okay, so importance of MACD bearish and stochastic RSI bearish. Okay, I hope you are aware of this particular thing, that whenever MACD is bearish, stochastic RSI is bearish, then the market goes bearish. Whenever the MACD is bullish, stochastic RSI is bullish, then the market goes bullish. Okay, so this was the condition. Yes, all of the moving averages are bullish, everything is bullish, MACD is bullish, only stochastic RSI is bearish otherwise. Okay, saturation and overbought, everything is there. This means that on the daily chart, the S&P 500 is 80% bullish, 80% bullish and overbought and saturated. So now the S&P 500 is overbought and saturated on the daily chart as well as on the weekly chart. On the weekly chart, it is 100% bullish. So overall the picture is, if we combine the daily chart and the weekly chart, the S&P 500 is 90% bullish and overbought and saturated. Simple. Okay, and the same thing if you notice here in case of the Dow Jones. So in case of the Dow Jones, again exactly the same thing. So now I hope this picture is clear, the bullish and all. So what does this mean? Okay, the 90% bullish and heavily overbought and saturated. This means that any more bullish movement in the S&P 500, in the Dow Jones and in the entire US stock market will face some struggle, okay, and will be highly susceptible for an intraday fall. because the market is overbought and saturated on the daily chart as well as on the weekly chart. Okay, so that's a problem. So this is how it is going to work. And other than that, other than this factor, the Dow Jones, okay, yesterday it hit one of its strong resistance level, okay, and then it struggled, and then it closed below that the resistance level. The S&P 500 at the same time also hit its resistance level. It struggled at the resistance level, okay, tried to sustain at the resistance level but failed and closed below the resistance level. Okay, so these are some conditions: overbought, saturated, resistance levels. Okay, means these are conditions which are saying that the upward movement for now, okay, or from now on, upward movement, okay, it will be kind of challenging, okay, for the S&P 500 and for the entire stock market, unless there comes a manipulated bullish push. Okay, it is not possible for the stock market to keep on moving up and up. Okay, so means under the normal circumstances, under the normal scenario, this is not possible. That's what I'm trying to say. Okay, so anyways, whatever will be happening, where if it fails at the resistance level or if it clears the resistance level, then where it will be heading to, okay, or if it will be coming down 10, then to what level. Just like that, when it came down, okay, it sustained heavily at the zone, okay, on this the Wednesday, right? And then we have seen this kind of condition. So whatever will be happening, I will keep you posted through these, the daily updates, the daily precise updates of the S&P 500 on the daily basis from Monday through Friday. And guys, it's not just about these the daily precise updates of the S&P 500, but I also give these the stock market opportunities in the premium stocks of the US stock market, top 30 or 40 companies of the US stock market. So whenever you want to join my Patreon community, I have given the link in the description of the video and also in the comment section. And when you follow that link, then you will see that this is my Patreon page, this is my Patreon profile. And on my Patreon page, you will notice that there are these two tiers. So the only difference in these the two tiers is the geographical location. This one is for the non-US and Canada residents, and this one is for the US and Canada residents only. So when you subscribe to either of these, then you will be getting the daily S&P 500 analysis, precise updates and probable movement every day from Monday through Friday, as well as the stock market opportunities minimum 5 to 10 every week in the premium stocks of the US stock market. And guys, if you notice that many people have joined my Patreon community for last many days, weeks, months, more than a year, and they are getting these the daily precise updates of the S&P 500 from Monday through Friday, as well as the stock market opportunities in the premium stocks of the US stock market. So whenever you want to join my Patreon community, I've given the link in the description of the video and also in the comment section. You can use that link to join my Patreon community, and you are welcome. Now guys, I am going to discuss the fourth and the last point of the agenda of this S&P 500 weekly technical analysis. And in this, the last point of the agenda, I will give you the probable movement of the S&P 500 from February 5th, which is Monday, to February 9th, that will be Friday. So whatever is going to happen in the S&P 500 in the next week from Monday through Friday, I am going to discuss here. So before that, a few things to consider. Number one, next week is blank. Blank means the earning season is over. Also, no specific economic data. So blank, kind of blank. Blank means that now it depends that how now it depends on the market participants. Okay, that how they want to run the stock market, whether it will go bullish, bearish, hold. Okay, means what will happen. So it will depend. Okay. Now, second point is that now the Wall Street is kind of convinced that there will be no rate cuts in the month of March, but still the Wall Street is fighting. Okay, it is the Wall Street is fighting to the Feds. Okay, and this is a bad situation, because whenever the Wall Street try to do so, okay, means the market or the Wall Street cannot fight the Feds, and this is what everyone knows, but still the Wall Street is fighting the Feds. That Wall Street is saying that there are still some chances or good chances. Okay, 62% chances there will be no rate cut, and 38% chances that there will be a rate cut. Okay, so Wall Street is still fighting the Feds. But if there comes like more economic data next week, and which further disappoints the Wall Street, then Wall Street will go for a very heavy correction. Okay, this is clear. And the point number 3, the interesting point, is the 5,000 mark. Okay, so S&P 500 is now very near to the 5,000 mark, and this is where the S&P 500 is going to face a very heavy resistance. What kind of resistance? It's a psychological resistance. It's a psychological resistance. Okay, it's not any calculated level of resistance. It's the psychological resistance, meaning that whenever an index, particularly the S&P 500, whenever it reaches to like 1,000, 2,000, 3,000, 4,000 or 5,000, there comes a psychological block. There is no technical block, there is a psychological block. Okay, and the stock market, this S&P 500, initially it will remain shy of 5,000. It may try to move up, fail for 1 or 2 days, will remain like this, and then if there comes a sudden and heavy push, so this psychological block can be breached only with a heavy push, otherwise not. So this is what we know. Okay, the psychological block. Now when we consider the 5,000, okay, so let me cover the 5,000 with other technical factors. So I hope these things are clear. Okay, now as of now, the entire US stock market is absolutely overbought and saturated. Okay, first problem for the market. Secondly, on Friday the stock market was up, bond yields were up, and the dollar index, it was up. And yes, let me show you one more interesting thing. So what they are trying to do, what they are trying to achieve. Okay, if you notice that it was coming down. Okay, there is this the mark level. Okay, the 10-year bond yield, it was shy to breach the level. Okay, it moved bullish, then it was coming down heavily, and then on Friday it moved up. Okay, defied the theory and the laws, everything. Okay, why they are trying to keep the bond yields like this? Why they are not allowing it to come down? So the reason is that if this happens, then it will relate to the movement something to 2008 2009 recession, before that 2000 bubble burst. Okay, so this means, in simple words, when the 10-year bond yield breaches the mark, or initially if it breaches the 3.783% mark, it will bring more pressure. Okay, more there's the bearish pressure, and once it breaches this mark, in that case there will be a heavy fall. As per the technicals, we are anticipating a heavy fall in the bond yield. What does that mean, heavy fall in the bond yield? Okay, this means that the demand of the bonds has increased overnight, because this breach will then trigger, okay, what we are saying, a soft landing, a correction. Okay, so this is how the things are interrelated, right? So considering Friday, this condition was there, overbought, saturation is there. Now the 5,000 is there in the site, and now also there is a resistance. Okay, for the S&P 500, a very heavy resistance. Okay, and other than that, there is a resistance in the Dow Jones at 38,000 approximately. This is not the exact number, this is approximately number, 38,700. Resistance 5,000, overbought, saturated, up. All of these the conditions are saying that upward movement is not going to be easy. I'm not denying the fact, or I'm not denying that in this particular thing that there will not be any upward movement. There may be an upward movement, or there will be more upward movement, but the upward movement will not be easy, and it is going to face a very heavy pressure. And all of these factors are one thing, and then the Wall Street is fighting with the Feds. That's the worst part. Okay, that the Wall Street, and historically never ever, okay, means Wall Street tried to fight with Feds, but it always failed. And the failure, okay, in this kind of condition, it has resulted in a correction, in a short-term correction, long-term correction. Okay, so this means that more bullish movement can come, not a problem, but we need to see the intensity, the movement, the momentum, the levels, everything before we can confirm anything. Okay, So we can clearly see, or we can say that now the entire US stock market, not S&P 500 or not Dow Jones, the entire US stock market has entered into a critical phase. Now, in terms of the numbers and the levels, 38,700 approximately in the Dow Jones. Okay, this is there. Until and unless the Dow Jones sustains, moves up, breaches, sustains clearly two consecutive closings above 38,700. Okay, and then two consecutive closings above the resistance mark here for the S&P 500. So once this happens, two consecutive closings above 38,700 and two consecutive closings above the resistance mark of the S&P 500, okay, there will not be a concrete or a confirmation for the bullish movement. Okay, if there comes like a closing on Monday which is below this mark or which is below 38,700, this means the first failure. But still the market, because it is heavily bullish, it may sustain. Then we will wait for Tuesday, okay, or Wednesday or Thursday. So once we see that there is one closing which is above the resistance mark, which is one closing above the 38,700, then we will wait for the second consecutive closing. Okay, second consecutive closing above the mark. If these two consecutive closings comes after on or after Wednesday, in that case we will wait for three consecutive closings. Because if the S&P 500 and the Dow Jones fails to sustain, okay, at this the critical mark on Monday and Tuesday, in that case this means that these resistances and the conditions in the market are weighing heavily on the entire market, and we need three closings above these resistance levels to confirm that more bullish movement is safe. More bullish movement can happen, not a problem, but whether it will be safe or not, okay, for that we need three consecutive closings if the closing is seen on or after Wednesday. But if the closing is seen on Monday and Tuesday, then two consecutive closings. Okay, and next where it will be heading to 5,000. But before hitting 5,000, it will remain shy. One more thing, the market, the S&P 500 needs a heavy push or a very heavy push to breach the 5,000. Without a heavy push, 5,000 breach is not possible. Historically, 1,000, 2,000, 3,000, 4,000. The same picture, the same theory. Okay, the market needs a heavy push, and sorry, not the heavy push, a heavy manipulated push, because it's a psychological block. It's a psychological block. Okay, so market needs a heavy manipulated push to breach or to break the psychological the mark. Okay, so that's there. Other than that, it's not just about the psychological, okay, block. Okay, there are many other resistance factors. Okay, the overbought conditions are there. So all of these things are saying that something is not right in the stock market at the moment. Something might be right, okay, 1 month or 2 months ago, but now particularly at this point of time when the Federal Reserve Chairman has cleared and confirmed a few things, Wall Street is fighting, okay, fighting the Feds, and this is not in favor of the stock market. Never ever, not even a single time it has worked historically. Now in the bearish side, what is there in the bearish side? In the bearish side, again with the Dow Jones, okay, so with the Dow Jones bearish side, 38,070 is the mark. Dow Jones will not go down, S&P 500, nothing will go down unless Dow Jones loses the 38,070 mark. Very, very simple. Okay, no rocket science. This means that if the Dow Jones remains above 38,070 and the S&P 500 comes down, okay, and might be trading around any level, but still the Dow Jones is trading or is sustaining at 38,070, this means that S&P 500 is also not going to come down. Whatever the fall will be there, okay, it will be normal or it will be very limited fall, rather it will simply retrace. Okay, very, very simple, no rocket science. Okay, and now more fall will come only and only if the S&P 500 comes down and breaches the 4845 mark. 4845. Only when the S&P 500 breaches the 4845, it will be coming down, and it will be coming down to The low of the candle is 4698. 4698. Okay, after losing 4845, it will then move towards 4698. But in between these two, there are many other support levels, some good support levels. Okay, so next week, because there is nothing much there in the picture, means there is no earnings, okay, no economic data. This means that, and also the market is filled with heavy bullish sentiments, and even with the better than expected non-farm payroll data, which was heavily disappointing to the stock market. Okay, the stock market has simply neglected the data. This means that whatever bad or worst was there, the stock market was neglecting. This means that if the stock market was neglecting the bad or the worst, then next week is blank, because technically it is overbought, okay, and saturated, and on Monday or Tuesday it will become heavily overbought and heavily saturated, okay, or oversaturated. Okay, that is the technical point, or that is a technical factor. Even though there is the next week is blank, but these technical factors can force the S&P 500 and the entire market to give up. However, for now, any fall we can expect that any fall will be limited to this particular mark, okay, 4845. Okay, and only if the 4845 is breached, then only they will come. Yes, there is one more thing. Okay, I forgot to mention that particular thing, very very important thing, and that important thing is that is the 4818. S&P 500 is under technical obligation to retest or to test and retest the 4818. What was 4818? It was the previous all-time high level. Okay, so S&P 500, I think what the number was here, or okay, okay, this was the candle. So if you notice that after this candle was formed, okay, on January 19th, the S&P 500 moved up, came down a little and moved up. So there was no retesting of the 4818. Okay, as per the technicals, historical movement, okay, this is nothing new, and those who know the technicals even a little, then they know that the index comes under obligation whenever, not just index, not the index is a big thing, even the stocks. If a stock has breached its previous all-time high, then it will come down, it will then retest the previous all-time high, it will then try to sustain, and once it sustains, then only it will move up. But in case of the S&P 500, 4818 obligation is still pending, it is not, okay, it is not fulfilled. So this is a technical, non-technical, okay, everything, okay, that you can say. 4818 is still in the picture, a technical obligation is still pending. Okay, it may happen next day, next week, or anytime, but this will happen certainly. Okay, this is, I am 200% sure. Okay, because historically it has always happened, not just to the index or the indices, but also to the stocks. Okay, even the stocks are heavily manipulated, but it happens to the stocks also. Okay, so but 4818 will come into the picture only when the S&P 500 breaches the 4845 mark. Okay, clear? Then it will try to sustain, not at 4818, it will come down, it will come below 4818, it will also lose 4800, then it will come down, and it will then try to sustain. Once it sustains, then only it can move up. Okay, otherwise not, right? So bearish movement we know, bullish movement we know. So overall, this is where we are anticipating the entire, okay, this is the scenario, okay, this to happen. And if you're my Patreon community member, then I will keep you posted through the daily precise updates of the S&P 500, where it is heading to, what is going to happen, whether it is going to fall, whether it will move up, and so. And if you have not yet joined my Patreon community, then you can join my Patreon community, and you will get the daily precise updates of the S&P 500 from Monday through Friday, as well as the stock market opportunities in the premium stocks. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit like if you have liked this video. And if you have any questions that you want to ask, then please feel free to ask your questions through the comment section. So I've given the link to the Patreon community and to all of my programs in the description of the video and also in the comment section. So guys, this was my S&P 500 weekly technical analysis for the week of February 5th, means from February 5th, which is Monday, to February 9th, that will be Friday.